Okay, I'm going to be doing some trading today and recording myself. Don't usually record myself, but I figured I've got a pretty clear read on the market this morning, I figured, and it's also a framework that I've been working on recently. So wanted to see how I go executing it while recording myself. So I'll actually bring up what this framework is real quick. And if we drag across to the desktop, you can bring that up. So essentially what it is when 9:30 a.m. opens up above a major liquidity pool. And there are a few other conditions that make this a really nice model. So first, the regular trading hours and electronic trading hours narrative both agree. So enticing longs. So both of them, any traders were being enticed to buy going into the RTH close, and then the same during the ETH. 9:30 is opening above a high time frame liquidity pool. So any traders who are operating on RTH, they get tripped on long right at the open at a deep premium. So they're hits for buying at a expensive price. Traps traders at a further obvious liquidity pool. So I define that as a area on the chart that's at a deep, like quite far away from where we are. And anyone who bought from this point onwards, they're all going to put their stops all the way down here. And so rather than us moving a little bit lower and then going higher, we make a very direct move to that low. Then trailed stops, the same kind of thing, below these lows. SMT on the highs, and then if not, you can do low time from SMT, then short-term liquidity accumulated since a certain time. I'm not too exactly sure when, maybe 9 a.m. let's say. And yeah, then looking for that right very close to the open for us to have a nice move lower. So if you look at what we have here, you can see that is exactly what's happening. This is FOMC yesterday, closed with a really nice long wick in 1800 right here. We opened up and traded high instantly, hitting all these relative equal highs. This is the delirium framework going to the impulse high in one shot really nicely, pulling back and then having this rally up to all-time highs. So we've had these breakout above these smooth highs, breakout above the previous day high, as well as a very enticing looking rally. Now if I drop down to the 15 minutes, you can see I've got a bunch of lines here, and I'll talk through what these are real quick. RTH just represents the regular trading hour close. London low, that's a obvious impulsive liquidity pool that I believe we're very likely to target. This one could also be worth having on my charts just because that is also very likely going to be targeted, and I'll just do that. We'll then have midnight, it's very important. 8:30 is all the way up here. I might as well put that on just for completeness sake. But as you can see, we had a little failure swing and broke down aggressively. Now if we jump to the RTH, you can see the narrative going into the close. So FOMC happens, and the most recent thing going into close, we had this big rally and then a pullback, and then began continuing higher. So you can know that there'd be people enticed to buy going to the close. Also, we're breaking out above all these highs. And this high particularly stood out to me because if you look at the high of that candle, it is basically at 24,600 on the RTH. It's yellow because of an indicator. It's just the 9:30 open. But essentially, that's perfect retest of a institutional level, is creating the idea of support and resistance. So traders will see this as a resistance level. And so when we open up above this previous day high, that's going to count as a breakout. And so you can imagine that anyone looking at this chart will have buy orders above this level. And then when they get triggered in during the RTH, let's say stock traders trading the QQQ and such, they'll get triggered in up here. So rather than them buying down here, they'll be buying all the way up here to deep premium. That gives the market an opportunity to drop very aggressively. Now, keep note of where this line is. If I go back to ETH, you'll see that that line lines up nicely with the London low as well. So I believe that could be a very nice draw. Now there's a clear market maker framework playing out here as well. If we go and have a look at the 5-minute chart, let's try and do this before the 9:30 open. So first of all, you can see it pretty obviously without even pointing at anything. You can see very clear SMT on the highs of ES. And then if we look back at NASDAQ, this is the original consolidation. I have this line here because you can see that the 1900 and 2100 hourly opens essentially at the same price. That represents an original consolidation. Very likely that we get down to the level. Notice how it's also below that London low. We then have first stage and second stage of the market maker model, a smart money reversal. Absolutely perfect. SMT on the highs as well. And now on this side of the curve, what I've been looking for is first stage to happen somewhere within this box, and then second stage around this area down into the lows. First stage, you want to see a short-term high and then an intermediate-term high, so I'm expecting something like this. And then for second stage, which would happen around here actually, you'd be looking for a move more like that. That's kind of what I'm envisaging. As long as we open up above the previous day high, or if we open up just below that we tap the previous day high, then that is good for a short. We're still above midnight. I don't think we'll be returning up here before getting down into these lower discount areas. First target will be this short-term low. I think that's a very, very high probability target because it's the only impulse low in this leg. So we have trapped traders. We're opening up above previous day high, SMT on the highs, RTH, enticing longs. ETH, we've been enticing shorts. However, we were enticing longs earlier. We've had real displacement through this low. So whoever wasn't taken out here, their stops are now at this swing low. So very likely that we drop down to there, but we're about to open. I'll log into paper trading accounts. Day trader, that'll do. And I'll just check that all my settings are good to go. So this is the very last second, as you can tell. Trading. So turn that off and apply to all. And now I'll turn that on there. Cool. And I'll try it with 3 contracts. So I just got all these lines marked out so I can pay attention to them. I'll probably have the 15-second on the left and the 5-minute up on the top right. But you got a good idea of where we are at. Needs to be watching ES as well for that SMT, but we are likely to just break lower. And as you can see, we haven't really taken much in the way of buy side since 9 AM. So that might actually be what I waited for initially at the open, or at least some narrative that we've enticed longs and then I can attack their stops. Because right now, sure, we do have SMT with the 9 AM high. So right there, we've got SMT, but and I believe we are likely to drop low at the open, but yeah. So 9:27, this up close candle, that is the last minute that orders on open can be entered into the market, and at 9:28 and 9:29, they can no longer be changed. So whoever was putting in a market on open order, they're now locked into position. Most likely they were looking to chase this long up potentially, but you can see that aggressive move right at 9:28. That gives me an indication that we may actually just puke at the open, and I am going to be ready for that just in case we do. But ideally, I'd like to see us take a bit more buy side. The only reason why I would take it is because we do have the SMT on the highs, but I need to see some more narrative post open that tells me that that is what the case is. Also, this large sell-off and then these long wicks, whoever's chasing this short down, they're going to need a place to trail their stops. So above these highs, there will be buy side. If we can tap that and maybe even dip up through the 700s, be ideal. But we already took out some buy side there with SMT, so I like that. the 80s sitting up here as well. Should really have those on my chart. We did take some buy side just there. E is still pushing lower. Don't want to hesitate, but also don't want to just randomly jump in. Like, could potentially have got in after we took out this high. But yeah, definitely do have SMT on the highs up here, and we got SMT in the low time frame just there as well. So what I want to see here is if we can leave a portion of this open. And just paying attention to that 15-second chart as well. That's what I've got the most attention on right now. So quite a deep pullback. We did hit the 80s just there. I'll actually put those out on the screen just so I can read them a bit better. So failing to head up to that high on 30. So these lines just represent the institutional levels. So because this left a long wick and then had this big down closing candle, and we had this, the pre-market narrative, the ETH narrative was actually that we were going lower, which is not the same as the RTH narrative that we were enticing longs. So it makes sense for us to first entice shorts, second, take out that buy side, and now hopefully we can get some SMT on the highs here, potentially head back down. If we do run higher, this stands out to me, this short-term high, and it's a potential area we could reach for. Coming right up to the 700s, not quite getting over it just yet. I really like this long wick on the 5 minute. So if we can close this candle with a nice long wick to the downside, that plus the 5 minute wick that we had before that as well, that would create a very nice narrative that we are enticing people to trail their stops up to this level. And just remembering as well that we have this range in here. Most specifically, I'll be looking at these imbalances through this range. I'm not going to keep the box on my chart, but you can see that lines up nicely with that impulse high as well. So E is still failing to take out that high. That's a really good sign. How to get in? If we did break down right here, I'd be watching the most recent impulse low for a potential market structure shift through that on the 15 seconds or the 1 minute. I really like how the wick on this candle formed in the last 15 seconds as well. So that's also indicating that we may be good to go. Now, if we can get since we took out this low, if we get a closure back below this low after delivering buy side above it, then that's potential entry. If not, then we'll likely run up, make a new high. But this candle, as you can see, it forms in the last, majority of the wick formed in the last 15 seconds, meaning that this is potentially the actual high. So I'm ready to hit that sell button if we get a closure back below this low. Trading view execution tends to lag a lot, so it's just a paper account, but yeah, I'm just being very aware that that can happen. So I really like this long wick as well, the fact that that also occurred in the last 15 seconds. But the difference is, if we were to now overlap one wick or the other, then it invalidates the other one and it gives us a really clear sense of direction. So far it looks like we want to have another run on the highs. And I would ideally like to see if we can tap this short-term high. So we just printed that entire 5-minute candle with a nice strong looking up close, enticing people to buy. Now the reason why I don't think we need to hit up to 8.30 is because one, we already have that SMT on the highs and took out the buy side, and also between 8.20, which is right here, between 8.20 and 8.30 we already ran out buy side, so we already did a manipulation during that time, and it put in a clear smart in a reversal as well. At the moment we've got that short term high, and now I'm assuming we're going to put in that intermediate term high up in this area for first stage of the market maker model. If between 8.20 and 8.30 a.m. we hadn't run any buy side and then 8.30 just sold off like this, I would see 8.30 as a very, very high probability draw for the 9.30 open. But in this instance, it's not necessary. So very high resistance pushing up, noticing that we're leaving all these smooth lows, multiple vertical lows down here, along through here as well. So it is shaping up quite nicely. The most recent swing point is there. But what I'm paying the most attention to is how we have all these long wicks on multiple time frames that fits the narrative that we are enticing people to traders to see this as a bullish rejection and trail their stops to these levels. So creating a long wick there. Still nothing to do just yet. It needs a bit more clarity than that. And even if I didn't catch the absolute top of whatever this AM range is, it's better to let it give a really obvious signature before jumping right in. So this low I'd be watching. And the reason why is because this is an intermediate term low. And so if this one gets broken, then that's showing, yeah, that's looking quite good now. Okay, I'd be using likely stay below the midpoint of that. And if I can get a fill, I'd like to go short right there. As long as this candle doesn't go straight back up, then I need this to be some form of a breakaway gap. Possibly could have waited for us to leave an imbalance first, but I was also expecting it to likely be heavy. But us breaking that low is showing that bearishness. And my stop's just at the high end of that wick. I'm going to quickly get ready to take a partial. So I only want to be taking a partial, as I mentioned. Ideally down here at 22.5. Even 22.75. And I really like the speed and distance. That right there could have also been a short-term entry. But also watching to see what ES does as ES hits this low. So at this point, we shouldn't come back above this high. That should act as a breakaway. If it does come back up, then that's not good. So we just saved about 30 something% of risk. We just cut the risk down basically. Usually I'd take a partial at a deep discount internal range. So I want to see speed through this level. If we do not get speed through this level, then I'll need to take something off the table. But so far it is looking good. Beautiful. So that's looking good. Getting that push lower. Now I'm trying to hold trades a bit, for my extra targets. Midnight being a high probability target. But really liking how we're melting at the moment. I wouldn't want to see us come back up into the range at this point. I'd expect us to remain quite heavy and push down to this level. We are hitting midnight. Technically, invalidation is now above the intermediate term high, but because of the heaviness that we're seeing, I should probably leave this here for now. Because of the heaviness we're seeing, I wouldn't want to see it come up deep into this range anyway. This was actually a entry right there on that candle's closure, and you can see that's where my stop is right now. But essentially what that is this is a intermediate term low. We break below it, begin rejecting higher, leaving an area where we're expecting a breakaway gap, and then closing back below. On that closure, you can enter with a stop loss above that high, giving a very high risk reward ratio. So monitoring ES as well, want to make sure that we're not just getting reversed on. If we came up, I'd want to see ideally us remain with it below this SIBI, but if we did come above, I'd need to see immediate rejection from that high. As we are nearing this first take profit, I'm just monitoring that. I might actually trail that one down. Gotta say, it feels a little bit nerve-wracking. Because usually midnight is a place I'd take a partial. So maybe I'm just being a bit greedy, waiting for the lower price. But I'll trail this down to here anyway. So one stop. If we trade up above the midpoint of this fair value gap before hitting this this point, then that's not such a good sign. So I need to see us continued heaviness down to this level. And I'll leave the stop loss up here for now because, as I mentioned, my targets are all the way down here. And if I put on a risk reward tool on this, I can identify what it's actually at. So my initial stop was at the high end of that wick. So currently so that would be at 2.7R to midnight. Down to our first TP, I've got it at 3.5. But if I was to hold all the way down to that original consolidation, it offers 6.8R. So I like this nice rejection from this high, getting a strong push lower from it. So I'd like to see this finish off the job and continue pushing. The reason why I've got it sitting just above that level is because that level is at the 20s as well. And a lot of the time price can pull down to the 20s, engineer a low just a few points before it, and then run back up. So I'm liking this red candle pushing directly straight back down after creating that rally up. So I'm just going to trail that stop down closer and look for that to finish the job. And at this point, I'm actually also, there we go. So that's our partial. Turn on executions actually, so you can see the So at this point, I'm going to be trailing the stop using the 2-minute trailing stop method. So if I bring up, I've actually got an indicator for it. This just shows me the previous 2-minute candle Actually, maybe it won't work. But yeah, I'll be taking the next one off down here. And actually, for a very similar reason to this one being taken off here. And that's because this is that previous day high RTH resistance breakout. We could easily pull down to that level, engineer another low to then entice people long, because people will see this as a support and resistance level. So you can see that's the old all-time high using the RTH. We might pull down to it, then climb a bit just to entice long. So taking off a partial just there for that reason. Final TP, I do want to just see if we can get down to original consolidation. Also, while we are moving like this, I want to try and point out how I would trail my stop loss because I haven't actually moved it yet. But essentially, this is the 2-minute chart. So I'd trail my stop to the previous 2-minute candle high. Looking over here, I'll turn on the positions. So if you look at the 2-minute candle, I'll hide that, don't really need it. The previous 2-minute candle high and then once we break the low of that candle, I then trail my stop to that previous 2-minute candle high. It's just a very arbitrary way to trail the stop loss mechanically in a fast moving environment. And when we are moving quite fast, we typically will not come up to that level unless we're having a more significant reversal or nearing the end of the trend. And because we're in this fast moving market, if we are going to keep on pushing down to here before coming higher, then this will be where you do it. This could actually send us lower from this fair value gap. And the reason I say that is because this is second stage of the market maker model. If you look at our location on this time frame, that's the first stage of the market maker model occurring in the same area as the second stage from the buy side of the curve. And now we are below the first stage of the market maker model down here, and you're expecting a fast move, fast entry and exit. So this could actually be an entry right there. That's a raid that we're rejecting price. But it should remain heavy here if we are to continue pushing lower. So that's why I'm also comfortable having my stop loss right above that high. Ideally, I want to see a portion of this fair value gap remain unfilled. I need to move all these lines over. There are way too many lines here. As you can see, we made that low at that previous regular trading hour high. And so I'm not forcing it to that level. I'm going to go the same principle of going to just a few points above the 80s. And that gets us just below that London low. Because we are so close to that major liquidity pool, it does make sense for us to then create a false low and pull back into the range as well. So this may just get stopped out in profit. But yeah, holding for that. Still feel like there are too many lines. So now we can watch the 2-minute chart and just see, does it tap that high or not? And it does. So there you go. That's the, what did I call it? The Primes 930, quantifiable. That is essentially exactly the same as what you see right here. So yeah, that would be, if I was trading this on a prop account, that would be me done for the day. Happy with that execution. So ended up with probably our average exit was around here, because we got one at 606, one at 620, and one 646. So probably roughly here. So it's a 3.5 hour trade, approximately. This speed up through this high, that's not a good sign, and we're hitting a lot higher. So that shows how trailing using the 2-minute trailing stop, if you're ever unsure of where to trail a stop because the market's moving so fast, just trail it on the previous 2-minute candle high. And then you don't have to be worried about it being too close, because 90% of the time, if I was taken out and it did make a new low, it would probably mean it was about to reverse from here anyway. So yeah, pretty happy with the execution. And I will potentially go over a few other charts later and show some other examples of the same framework. But you can kind of see it now if I zoom out a bit, go on the 5 minutes, and I can just point everything out just in an easy way. A previous day high, we're opening above it at 9:30. We then have the regular trading hours down here, close. We were enticing people to buy going into the close, so they need someone to trail their stops. We then have the same narrative at the open on up here just before the open. We had this aggressive sell-off, but then we were enticing longs with these long wicks, and also whoever was buying since the London low, they need someone to trail their stops. We then create a low for them, entice them to buy going into the open, and then sell off aggressively. But right now, I'd expect this high to remain intact if we are going to continue down to the London low. So I could be watching for that, but I won't be putting on any more trades. But it came up really aggressively above these highs. And you also have to think about anyone who was watching from 8:30 all the way into 9:30 open. They're probably thinking that this is the high, this is a short, but there was nowhere to trail their stops. Like, no one's dumb enough to put their stop right above there at the open, and we didn't even hit this impulse high. So we've now engineered a really obvious high and then enticed people lower. Whoever was short up here, they would have now trailed their stops to this high. So what I'd expect is us to take out this high, and then if we are going to go lower, it would need to set up some more structure around that.